हूँ सर, अभी अभी स्टार्ट होगा।
We are live now. I think we can start, sir.
Yes. Good evening, friends. I am K.K. Gupta, your host. I am a director in Association of Financial Advisor of India, which was constituted with the main object to give knowledge to our stakeholders, to the financial advisors. At present, we are more than 400 members with us. And this is our 15th webinar under this series. We have started the webinar from the 1st January 2022 on a different subject. Today we are talking about digital banking, trend, opportunity and challenges. We are having eminent speaker with us. So we are having Shri Kalia sir, who is former executive director Union Bank of India. We are with us Mr. Roy, who is field general manager Indian Bank. Mr. Manish Arora and Mr. Sani and my friend Shishant. Friend, this webinar, I hope that will prove to be very useful. And this webinar is architect of our Indian Bank Field General Manager, Mr. Rai. He suggested that this topic of digital banking is of great importance in these days. And it is fast accelerating for the growth of digital economy. Government initiative to set up 75 digital banking unit. Indeed, a major steps to bring more people into the fold of modern economy. When we are talking about the modern economy, we are talking about the rural areas. We are having 6,40,000 villages, having 65% populations, and still out of the ambit, only 53,000 branches are there. I'm talking about the rural areas. I'm not talking about urban. I'm not talking about the semi-urban places. So it is said that one bank or one branch is covering about 12 villages. So this digital banking will play a very important role. Either you talk about the asset side of the balance sheet of the bank or liability side of the balance sheet of the bank. When I'm talking about the liability side, we're talking about the deposits. When we are talking about the asset side, that is a loan, which is major aspects. You must see that a rural economy, the growth of credit is not as much as desired to develop the economy. Our Honorable Prime Minister desires about 5 trillion economy. His dream is 5 trillion economics in 5 years. So rural area, when we're talking about the SME sector or rural masses, it can play a very important role. That means digital banking, when we talk about, or we talk about in a recent budget of 75 digital bank units will going to play very important role, which make the borrower Atmanirbhar. And we are talking of Atmanirbhar, you must say the borrower should also be Atmanirbhar. Because I seen a villager, a laborer, hesitant to go to the bank. So this digital banking or online banking definitely going to play a role because no borrower, no the party will require to go to the bank. So I'm not taking much time. So I have got eminent panel with us. We are Sri Sukh Sadar Prasad Rai, who is Shield GM, Indian Bank. Shri Roy joined the bank, the Allahabad Bank, in 1992 as officer. Worked from the initial in rural credit, vertical and subsequently as a branch head at the various semi-urban, urban and metro branches. During his tenure as a branch manager, in different capacity, handled MSME, corporate, export credit in Delhi, Hyderabad, Bhopal, Ranchi. Last year, he's having a leadership role as zonal head of the bank, as West Bengal, Madhya Pradesh, and now in Bombay. It's very exciting and contributing to particular in development of MSME sector and other green fields, project of sunrise sectors. Also food processing, warehousing, and logistics are growing sector that has remained been closed to his heart as a banker. I know him personally. He is a good administrator and he knows how to take the work from his staffs. Sir, my point, first of all, I must appreciate your sentiments. You are the architect of these webinars. You suggested me that digital banking, online banking will be order of the day. You must hold this webinar. So, sir, I opening with you only. How you feel, sir? Traditional banking. We are talking about the traditional banking. We are talking about digital banking. How it's a different? So my feeling is traditional banking, customer has to go to the branch. Now digital banking, only difference is only online banking, or you can say digital banking, mobile banking, you say internet banking, you say smartphone banking. I think these are the major issues, sir. How you feel that in coming 2 to 3, 5 years, how our economy will stand? So I just think that NPCI has aims that 1 million transaction in a day will be in 3 to 4 years. Sir, I will not take much time. I'm just hand over to you. What are your views about this digital banking? I'm not talking about the lending. We are talking about the banking. We are talking about both sides of the balance sheet of the bank. Either you are talking about the liability side or the asset side, sir. I hand over to Shri Roy. Roy, sir. Sir, unmute कर लीजिए sir. Unmute. Please unmute it.
Yeah.
Yes, sir.
Sorry.
Yeah, okay.
Thank you, Gupta sir, for giving me this opportunity to speak on the digital banking. I would like to convey my regards to Kalia sir, who happens to be a very senior, seasoned banker, and probably we have grown in front of him. Today, I'm a general manager, and he being an ED, he has seen the biggest bank. Thank you, sir, and I'm proud to be part of this discussion where you are. Rest all other my colleagues are there who are from having the expertise in different field and including digital banking. Why I suggested you to talk on digital banking, Gupta sir, the reason was that probably the paradigm shift is likely to happen. Some questions people are putting in, it is distracting our attention. Please don't put the question right now.
Okay.
Yeah, it is appearing on the screen. So please stop it. Why everybody will agree that there is paradigm shift has to happen. And I remember one sentence of the Nandan Nilekani when in a banking seminar or banking project, he told that whether the bank will remain or not, but banking will remain. So how this banking will remain? Today, what was the scenario? We joined bank in the year 90s, and since then we have seen n number of changes in banking, and we all have witnessed. It was complete manual, then we shifted to stand-alone system. Then from there we shifted to total branch banking, and then from there we have shifted to core banking. And very proudly we were mentioning this is a core banking branch, fully air conditioned, so and so forth. Now the thing has got completely changed. Now there will be no brick and mortar bank, and banking will be in the hands of the people. That is in the mobile itself. So let me differentiate between two things. One thing, what is the mobile banking, online banking, and what is the digital banking? In mobile banking, online banking, we were providing the few of the customer services to the customer at their ease through using the internet platform and using the mobile banking platform through app and so. With the invent of the internet and availability of the cheap internet, it became very popular. And now I would like to make a difference between digital banking. What is the digital banking? In addition to these services, digital banking is complete transformation of the banking in digital format. So here the asset and liability, the background of the banking, everything will be in the customer's hand, and they will be at their ease. The basic objective is that the customer satisfaction and customer convenience. These are the three things which we are prioritizing, and the entire banking has now been shifted on digital mode using different kind of algorithm, artificial intelligence, machine learning, and robotics. These are the four things which is working on the backdrop of the banking, and the entire banking system has been converted into digital mode. And we bankers, as on date, with the coming of the plethora of fintech company, we are into now under compulsion, or you can say that we have to develop a kind of cohesion with them and go ahead. Why? As I told you very clearly, it is the customer ease and convenience. So any kind of payment, any kind of loan, any kind of banking facility, we should make available on the mobile app, making our entire background of the banking system fully digital, and it should flow on digital channel. I will say that what are the core needs? The core need, I had some slide that I would like to share, but I'm finding a little difficult to share it. What were the earlier core need? core need was the transaction. Core need was the deposit of the money. So that those core needs got changed with the other needs of the customer that they tried. Their expectation was to make it speedier, faster. So we applied all kind of service branches. We applied all kind of collection services. And then gradually we moved to online banking, RTGS and NEFT. But all these were not good enough to give a digital banking feel. And these were only the enablers to provide the customer service. Now, what is happening in digital banking, the arena of the demand and the customer requirement again further increased. And now with the a marketplace kind of thing has happened. In the marketplace, a lot of fintech company and the aggregators came. That is a marketplace where all the banking services will be available, and we are supposed to integrate with all those marketplaces. So initially it appears that it is a very kind of competitive situation, but in fact it is not. It is a very collaborative situation. So we as a banker, moving with the collaboration with all those fintech company to bring all our banking services in a marketplace to capture the maximum customer. You know, over the last 3-year period, 130 neobank has cropped up, and the shifting of the customer has increased, has now tilted towards neobanking. If we banker will not be modernize ourselves and reach into the collaboration system, the market share we will be losing. Of course, all those fintech companies which RBI has not given to do banking, they are only the payment bank. They are only the aggregator of data. But by virtue of availability of lot of, validating organization like GST, NSDL, income tax PAN validation, then CIBIL, CRELIC, everything. We are now in position to validate the customer sitting at home through online mode or taking the data extract from there, and the customer validation will happen easily. And with the help of the algorithm, their credential will be worked out and we can easily lend them. So this kind of change has happened. So for my first focus was to enlighten the people that what kind of future we are looking into. In the second part, I would like to highlight some of the achievements which has happened. Not only from the Indian prospect point of view, let me first explain that our mobile app is Indoasis. We are going to make it an omni-channel kind of thing, where the merchandise will be there, and on the other side, the customer's requirement will be there. So in the first stage, we have also started lending digitally, and there is pre-approved personal loan available, which we are giving sanction within a minute's time. If anybody is onboarded on our customer list and they are having our mobile app, they can show their interest and application will be automatically flow. And within 1 minute time, the entire loan will be getting approved. So from where we are validating their credential. Naturally, all the sources which we are available, which is now online available with us for validation, the customer is getting immediately validated and the loan is being given to them. This is the scenario in Indian Bank, and we are going in a big way. Similarly, you all know the YONO app of State Bank of India. You all know the Union Bank, which has come with the UNext, ICICI app. So you will really surprised to know that the YONO had never thought that this much of traffic will be there. They are acquiring per day 22,000 new customers. Every day, State Bank is acquiring 22,000 new customers through YONO. Almost 4,500 loans are being sanctioned through YONO. Almost they are having 28 million, 2.8 crores of customer onboarded, and their growth of the acquisition of the customer is around 62%. This I only shouted for this YONO. It is happening almost in private sector platform also, Axis Bank, ICICI Bank, and recently State Bank has come out with one product, Car Express, your Express Car, where through digitally they are sanctioning 10 lakh of a car loan within 10 minutes. In ICICI, recently they have launched InstaBij, where up to 25 lakhs of unsecured business loan they are sanctioning in 30 minutes. Why I cited all these three names, putting the name in front of you? because you can easily imagine the might of this digital banking. What we bankers were earlier doing, we were doing a lot of due diligence, lot of paperwork. All those paperwork, due diligence has now been shrunken with the digital validation. So that is the future, and which our generation X or generation Z, I should say, is looking for, or the new generation. So you can easily imagine the future and the might and the kind of asset side what we are going to completely transform from the original system to the new digital system. Now, there will be no exception. Gradually, we are escalating it, and scaling up is going on for each of the bank. This I am not saying as an official, it is my personal perception that all the banks are moving into the digital channel in order to not to lose the market share and the customer and future potential customers. This is the scenario. Now, what are the facilitator and what are the challenges we have? There are challenges because it is all unsecured loan. It is to be monitored properly. It is to be reached to the last destination. It has the power to reach to the last mile of the people. But the challenges are that to whom we are taking on the back, that is fintech company, still the RBI has to come out with a regulation for that. The working committee got constituted. This working committee has given certain recommendations. Based on all those recommendations and with the fine regulators body in place, there will be a great synergy if all these fintech and aggregator who they are giving us the marketplace, who they are giving other informations, and with the collaborative approach of bank, because we are also investing in a big way in the technology, we can transform the change, the shape of the banking in future. The third important and fourth, I should say, the challenge is that cyber security. That is the biggest challenge because any kind of link or any kind of fraudster link may appear in your mobile and ignorantly you may touch it. So that may put you into problem. This is the kind of cyber threat is there. So whatever channel and security mechanism should be there, it must be foolproof. And that foolproofness and customer requirements for their security point of view, there must be a set guideline for their level of hardness. What level of hardness is required? It is a very dynamic thing which will keep on changing. So that those challenges are there where we are supposed to invest a lot. So with this investment in mind and the requirement of the people, I do see that the entire banking system from the asset side and liability side is going to a different arena. It's going to change completely. And what banking we had done in the past will get totally changed. This is the background I said to Gupta Sahab because
Thank you,
I
sir.
thought
Thank
it is
you.
a very relevant subject that
Sir,
we should
sir.
speak on, we should discuss, we should put our mind.
Sir.
Thank you very much.
I think, sir, you are rightly told difference between the online banking and digital banking. I think digital banking in the entire aspect, as you're talking about the asset side.
Sir, your voice is not coming. Somebody has unmuted his mic. Yeah.
Please unmute. Everybody should unmute, please. Request.
No, mute karna hai, sir.
Mute kar dijiye. So,
Yeah,
sir,
please.
actually, kya hai, you are rightly told a difference between the online banking and digital banking. Digital banking, you rightly tell, it is every aspect of the banking sector. Either you asset side or liability side, both way it will be covered. Sir, major point is fintech company. You are talking about the collaboration with the fintech company. Whether it will not a threat to the banking sector in future?
Sir, if we will not prepare ourselves, then it is a threat.
Okay.
If we are prepared to go hand in hand, then it will be a synergy.
Then it is a synergy. Sir, apna Kalia sir, have any comment on that? What apna Rai sahab had told? Any comment from your side, sir?
Unmute kar. Sir, unmute.
Sir. Unmute.
Yeah. So I think Mr. Rai has very, very brilliantly put the entire issue in perspective and shared very candidly as to how the banking has moved from traditional banking to digital banking. And I think with the examples of SBI's UNO, with the example of Union Bank's Union Next, and ICICI Pockets, I mean, these are the kind of, innovation that are being attempted by the banks in order to ensure that slowly and gradually all banks move in the digital phase only. And the kind of impact that in these initiatives have for the banks, he has also outlined how many customers are being onboarded by SBI on UNO. It's a remarkable number, and they probably would not have envisaged at that point of time. I think as we go along, we will discuss further as to what are the kind of future that we can look forward in the digital banking space. For the time being, I think he has set the whole issue, which was the subject matter of discussion for today's panel, in proper perspective, and I think we can move forward from here.
Thank you. Thank you very much, sir, for your beautiful comments for that. Now I'm coming to Shri Chandar Sahni, partner RNC ValueCon LLP. He is FCA, he is FCS, BCom, registered valuer, SFA. He is a lead author of 2 unique books on valuation titles, Business Valuation in India Beyond the Numbers, Address Server Valuation and Merger and Acquisition Conferences seminar organized by leading industries, professional bodies, including IBBI, SOCHM, PhD, and so many other organizations. He's a very experienced person. I have nothing to say. Lekin major aspect, Mr. Sahni, what I feel is, now we are discussing about the future of the digital banking. And we also discussed about the State Bank of India and Union Bank of India and other banks. They are financing on the online. Even documentations are being taken online. So my point is, what is the way to control the NPAs? Because you are sanctioned the loan without knowing, even without having personal touch with the borrowers. And how you are feeling that, how you monitor the accounts, how you feel that NPA level can be arrested. New startup and their utility in strengthening the collateral and recovery system. Mr. Sahni, what do you feel in that respect? I think this is a vital point in this digital lending. So have any views, sir, for Mr. Sahni?
So, thank you, Mr. Roy and Mr. Gupta. See, if you look into the digital banking, then digital banking can be broken down into 2 major parts. One we can say as balance sheet lending, which means that the lender is directly lending to the companies, whether as a bank, private sector bank, public sector bank, or as an NBFC. It could be said a direct finance also. An alternative and second level of lending, digital lending, I would say, is marketplace lending, which we also called as platform lending, P2P license, aggregator model, co-lending. So if you look into the one important point is that, yes, how do you collect it? So there are very specialized companies, sir, which are now working into dedicated collection of the amount which is lent. And like my fellow colleagues mentioned about, that there is a lot of artificial intelligence, there are a lot of data analytics, there is a lot of machine learning, smartphone is there. So using technologies, systems can be created. And in fact, there are companies who have done that. I'll give you one example. One recent company, Spocto. This company is purely into digital collection mechanism. And this company has recently got acquired by CredAvenue, which is another P2P based marketplace. And the valuation of this company was 400 crores. So there are companies which are working into mechanism of recovery. But what can be done is that even before the lending is done, there are a lot of, because I mean, how do you define digital lending? So if I just take 30 seconds, see this RBI working report, which was presented in November 2021, had defined digital learning. And it has defined that it has to be automated lending process using technology. And you will do 5 things: customer acquisition,
Correct.
credit assessment, loan approval, loan disbursement, and loan recovery. So when you say digital learning, digital lending does not mean that, yes, you go online and you do it. Your digital lending has to mean that from acquisition till recovery, everything has to follow. And obviously, there are statistics. As of now, I think about more than approximately 2% of the total lending of the banks and about 10% of the total lending of NBFCs is digital. So that means that there is a lot of time to go in that process. But yes, with this GST, a lot of credibility has come with eKYC, with DigiLocker, with this CIBIL and all things, so pre-approval, there are a lot of digital tools, and post-approval, like there are things like, how do you track a person? You can, go and track his activities online. There are a lot of sentiments which are there. There are a lot of artificial intelligence being built. And ideally, I think technology will be playing an important role. But at the end of the day, when as a consumer, I know that I have taken a loan, but my activities are being tracked, because it's very simple. Earlier, the income tax department asked to integrate the PAN and, Aadhaar. Now, many people were apprehensive. When we file our tax returns, there are a lot of 26AS statements are there, AIR statement is there, TIS statement is there. If you don't want to put the information, the department knows it. So using technology and using Aadhaar and PAN as an integrated factor, a lot of information is already enabled into the system, which, can be tracked and which will help in reducing the NPS. That is my view.
Very nicely. But you are telling, Mr. Sani, there is a specialized company for a recovery.
Yes.
At the one side for lending, fintech company, bank has to engage, or they have to develop a technology. Another side, the banker has to engage some specialized agency for recovery. That means the banking role will going to reduce it. What do you feel for that?
Then in fact, these marketplace companies, you have 2 options. Either you make the technology yourself,
Okay.
or you acquire the companies and startups which are into this platform.
Okay.
Because like I said, that digital lending, every bank has to go into digital learning, every NBFC has to go, and every marketplace also has to ensure that. So like the largest marketplace, which we say today is CredAvenue in company, it's a private company. Now that company did that acquisition, because when you become a platform, then obviously there are bankers on one side and there are borrowers on one side. You are facilitating the two to take but at the end of the day, you are charging something. So you have to make sure that, yes, you provide them facilitation for recovery also. But the system will evolve, sir. Like we say, the kind of technological systems we have in urban India, we still do not have in rural India.
Okay.
In terms of smartphones, probably in rural India, there are still feature phones, not many smartphones. So there, the system will evolve. And like I said, only 2% of banking lending is digital in nature as of now. So system will evolve as the technology will evolve, and we will find a fine balance wherein, we meet the full requirement of digital learning, lending, including the recovery part.
Thank you very much. Thank you very much. I will come back to you, Mr. Sani. So I am just asking Shri Rai. Rai sir. Rai sir. Rai ji. Chalo, let I should talk to Kalia sir. Kalia sir, have you any view for the NPA level, how it can be have a recovery?
I think as he was explaining, Mr. Sane, see the concept that has to be very clearly understood. If you are doing direct lending, you are monitoring right from the stage of loan origination to credit approval, to disbursement, to repayment. Entire loan life cycle has to be monitored by you. And including in case the account goes bad, the recovery mechanism has to be. But if, as he was mentioning, if you are going through some marketplace players, as is the case, co-lending you are doing, or you are using some other institution for the purpose of going on for digital lending, because we have not as yet developed those kind of capabilities within the organization. And I must tell you that the modern day banking has to pursue the path of ART of banking, that is alliances, relationship, and technology.
Sir.
Three put together. Otherwise, in the current environment, you cannot survive. No public sector banks can survive unless and until they have alliances and they have relationships and they have technology. All these three pieces are very important. And that is why alliances have become very important, because you have the balance sheet. Banks have the strength of the balance sheet on the basis of which they can lend. Fintech have the strength of the technology, the kind of data analytics that they can do from social media, and amount of the analytics capability that these fintechs have developed, and the kind of due diligence. I was reading an article, Gupta ji.
Sir.
It says that going forward, data would be a substitute for the collaterals.
You are right.
You just imagine the kind of transformation that is going to take place.
Sir.
Data will be much more important than the tangible collaterals being offered.
Sir.
So if that is the scenario, you cannot undermine the capability of these fintechs on the aspect of data analytics. And if the credit monitoring mechanism tools are always available with the use of artificial intelligence, machine learning, robotics, so many technologies have come into play. But after all that, in case an account goes bad, you will have to have those kind of type arrangements for the purpose of recovery of those loans.
Very nice, sir.
But alliances are very
Oh,
important at the current stage of the evolution from traditional banking to the full stack of digital banking.
I think this is new concept is coming, sir, with your discussion, Mr. Kalia. That is a joint venture, sir, like that.
Alliances is very, and
venture.
relationships are very important.
Sir, that is a major aspect. Mr. Prasad, Rai sir, anything? Shri sir. Now I'm coming to Shri Munish Arora. He is founder of Current Solution LLP. Mr. Munish comes with almost 26-year experience in marketing and financing in the space of manufacturing and financial service sector respectively. He built successful SME business franchise from the group, crossed multiple institutions from wearing multiple hats, and he is also heading the business head, product head, project head for digital lending. It's the most important issue. He has served in one of the world's largest bank, Citigroup, for 6 years. He was part of one of its kind alliance in the history of Indian financial service with Centurion Bank of Punjab for 2 years. He was a key team member who built up SME franchise Indian Bank is serving multiple roles. And Mr. Arora, who built up a digital lending platform and scale up SME business. He carry passion, enthusiasm, delivering on assignments relating to advisory, consultancy, monitoring, development issues, banks, NBFC, fintech. I think he's the right person to talk. Sir, how you built up this digital lending platform and scale up SME sector? Sir, have you any thought about the digital lending and digital, as you are say, SME sector, you have done so many great jobs. Just I want to know your thoughts about the sector of digital lending, digital marketing, or digital, you can say, banking. So I hand over to Mr. Arora. Please, Arora, sir.
Thank you, Mr. K. Gupta. And I think it's a eminent panel over here. One of my mentor, Subhash Kaliji is here, and very able leaders like Mr. Chandar and Sukh Prasad Rai. So, Mr. K. Gupta, thank you for having me over here. So my take on digital lending is, that this is here to go further to the level in which we all will be able to do everything on mobile, is what we have discussed already. But the good thing is that this will be making our life very convenient. Visiting to branch, I think, is already gone for sure. But what we are going to happen is that this thing will evolve to such an extent that it will become very contextual. That right now, if we go to Amazon, they offer the products on our own, right? So that if you have selected one product, they give you the next offering for you. Similarly, in our life cycle, the entire life cycle is what mapped by every bank and every fintech. They know that as a consumer, you will consume what in what stages of your life. As a businessman, you will consume what in your life, in deposit side or on lending side. As a businessman, similarly, as a consumer, what will you consume? What is your lifestyle based on your evolution? From going to a student, they will offer you student loan. The moment you go towards employment, they will offer you a solution on salary loans. The moment you become married, they will offer you loans on travel. The moment you go further, they will give you loans on auto loans, home loans. So each and every part of your life is being mapped right now, and it is completely tracked. I would say that it is all in the hands of large conglomerates, as we discussed about Google and all, Facebook and all, Amazon. All of them know our credentials very well. It is just that the data is sitting in the warehouses of these corporates. Each and everything is known. We were discussing about just a few minutes back. We were discussing about how the digital lending could be risky. When we say that nothing, the customer is not touched only. But the fact of the matter is, your mobile is such a powerful tool in the hands of these digital lenders or digital bankers. They know each and every activity you're doing by giving the access. By downloading their mobile app, you're inadvertently saying yes to so many data usage that they know that you are sitting in the office from which hour to which hour, you are going to home from which hour to which hour. They completely know your coordinates. Where are you contactable, during which part of the day you are contactable, in which and and how much time you're spending in those hours. So that is how that is how the deep now the transparency of your data is available to to play, as we say, the ecosystem which we have discussed, all alliances which we have discussed. All of them have sitting on piles of data, piles of information. Now it is on us as bankers to see what we can consume directly, what we can consume through alliances, and accordingly how we can analyze the data, how can we use the data in our algorithm, and develop products and solution and systems which can actually come to the same point, that convenience of the customer, accessibility of the customer, and making the life kind of better for the customer. So I think I have a huge optimism about this this thing. But on parallel, I would like to say that please be mindful of what data you're sharing, because ultimately everything is getting open up. So that's my initial thoughts on digital banking.
Mr. Arora, you are also the helm of affair of the DVS Bank,
Right,
where you have built up a digital platform
right.
and also scale up the SME sector. Have you any experience? You can say some experience of the borrower which scaled up in SME sector. Any
Yeah, I'll share
practical-
very practical experience, maybe not, I'll not go 30,000 feet. I'll try to come down to the ground and give you the real, from the ground experience. So we had a very, very tough, days when we started digital lending model. We all assumed that client will come, and click on the few buttons and they will take the loans. So it doesn't happen like that. For a good customer, there has to be relationship, banking going on. As Mr. Kalia pointed out, alliances, is one part, technology is one part, but relationship is very, very important part. So you need to have a penetration in the, clusters of SMEs, which we all keep talking about, be it, Ludhiana, Pune, Indore. Our team has to be there. So phygital model has to be there, in this whole scheme of things. Who is playing that role of physical? Could be a small institution like financial, fraud investigation team, the FI team, which we call it, field investigation team, who's touching, actually understanding that whether client actually exists or not. Right. Then I assumed when I was developing this digital lending model, we assumed that client will upload all the documents like balance sheet, IT return, and all the information which I want. They'll punch in GSTN number. Everything will be hunky dory, but it's not the case. Getting a OTP based access on GSTN data is the biggest hurdle right now. The data, the GST, the mobile number which is feed in the GSTN portal, it belongs to an accountant, belongs to a CA.
Sir.
Now, it is not easy for us to, get that OTP access. In fact, we ran a drive, for our existing client that, let them give the access of the, GSTN with certain frequency and certain, number of times. I should be able to get the data from the GSTN portal. Bank statement. We thought that everything can be analyzed through bank statement and we could get the credit done immediately, basis the cash flows, basis the, we'll assess the working capital need, 20% of the average net banking credit of the year, I'll give the loan. That is the assumption which I started the work with. But it was not easy. Bank statement was coming in broken form. Some months bank statement was coming in raw form. Something was scanned, something was, not scanned properly. Multiple bank statements were required. Some bank statements, my alliance with the partner in Bangalore, he was not having any tool to analyze that bank statement because the bank statement belonged to a cooperative bank. So I faced the challenge over there also, right? Then coming back to the the assessment of the limits itself, there was a challenge. How to negate the limits which are already taken from other unsecured lenders and other banks. You have to pull the data of bureau. Bureau data is not very present. It is very dated. So at least 1 month, 1.5 month lag is there. Bureau to report the loans, both closure of loans and both new loans. So we have to actually talk to the customer. PD has to be done. We have to talk. Maybe the light touch is there of the credit, but credit has to get involved. When I did the lending, I had to get the credit involved in some part or the other. So while we made the system very frictionless, paperless, everything can be done digitally, but getting every information, every data point was not so easy as we believe so. And then later on challenge on the expectation of the customer versus what we could do digitally, because when you make digital models, you are not you're working your own algorithm, right? You have your own scorecard and you're throwing one limit to the customer. Customer says no, not acceptable. I need a higher limit. Or customer says I have only this much collateral to offer. You are telling me to offer this 100% collateral, but I have got only 80% of the collateral value available as a to offer it to you. So a lot of negotiation happens at ground, and then valuation legal challenges are anyways. Mr. Chandan Sani has told you. So there are issues in property titles right now. All the land records are not digitized, so we have to still go through the 15 days process minimum to get the property titles cleared from valuer and lawyer. So entire chain we thought we'll squeeze the whole TAT in 2 hours. That's the way we started. That we'll give an in principle approval in 1 hour, we'll give a final approval in 2 days, and we'll give the disbursement in 7 days time. But believe me, it has taken almost 2 years of journey to come to the stage that we actually give the loan in about a 1 month time itself. It was going beyond 1 month. So it's not a very easy journey, as we say. It's full of lot of ups and downs. So we have covered that journey, and hopefully all the banks and the partners working together, we should definitely strive to do what we are destined to do in this country. Sure.
Rosa, I think you have rightly touched about the appraisal part or the collection of the legal search report, other things. So my only point is for a monitoring. Have any developed any tools with the DIBSE bank or because
Yeah.
the monitoring aspect is the most important aspect. And I am asking from Mr. Sane, VNP level, how they can control it. Have any view on that aspect, sir?
Yeah, I will have three tools which I'll share with you for monitoring. One is of course you monitor the customer utilization level of the limits. That is very important to monitor. Second is you keep on monitoring the bureau scrub. You keep on doing every month to understand whether he has taken additional loans from the other banks, or whether other loans have become delinquent. You keep on monitoring that very regularly. That is very important aspects. Third is you keep on understanding the client from the perspective of what GSTN, right, monthly sales, monthly business, what he's doing. So you keep on keep track of the activity level, which we call it. So that is another monitoring aspect which we used to do. Then there are various data sources from which we keep on getting information. If any legal case has been filed against a customer, we have a partnership where we can find out this customer has got into some civil suit, or some something has not happening with him. Then we have then we are coming in in probe also. Suppose customer is a private limited company, we get a pull. If he has taken some additional loans, the charge has been created on in the MCA records. We used to get that information also. So all these monitoring tools are available beyond the normal usual portfolio monitoring which you do at your level, to understand how is the account conduct in terms of check bouncing, in terms of the repayment behavior of other loans and your loan. So I am saying beyond this BAU thing, we used to do all this.
Thank you very much. I will come back to Munish Rosa. Now I'm coming to Shishant Sharma, Director Scorme Solutions. His exceptional leadership quality and his ability to cultivate cohesion in a professionally and culturally diverse group helped Scorme to establish itself successfully in more challenging environments. He has been the principal driving force in setting up the company. Being a marketing person, he has had immense contribution toward the achievement of some of unbelievable goals. So Sharma, just I want from you, you have listened to the other speakers. So we are more stressed on the monitoring side and the appraisal side. As a Scorme, you are also helping the banker. Either we talk about the bank statement, so where you are analyzing the bank statement, even preparing the balance sheet and P&L, you are fetching GST data from the respective department, either the legal cases, you are also fetching KYC. Other thing, I think you are doing it. And you are the main helm of fear of this Scorme from the beginning. You have done a great job for the company. May I know your thoughts about this process? How a digital banking can be helpful in financing,
Sure.
also
Thank you.
in your recovery. And Mr. Sharma.
Thank you for the kind words, sir. Very good evening to everybody. I think we have a very good panel, and we've been having a very deep dive discussion on some very core ground level issues. But it's always good to I would say understand and realize that what is exactly happening in the market also. So from that note, everybody has touched upon some very crucial elements of where exactly we are sitting when it comes to digitization in the country, for credit, for monitoring, for I would say banking services as a whole. Picking up a few points from everybody, as Roy sir said that we're moving towards a digital banking unit age. where we are setting up 75 units in the country. This will be a more of a chaos-based banking where you don't need physical presence or a discussion with the banker to avail any of the banking services. So it's one-touch banking which you are focusing on. And then moving on to Mr. Manish's point, where he said that where we are looking at the data in a very unstructured form while we are trying to set up a digital lending unit in the country. Now, these both aspects are very, I would say, linked and very close to each other. I would say why digital lending has picked up in the country, why we have been able to sit at this position and discuss on this webinar is because of a very crucial element in the country which has changed is access to information. So, access to information, or I would say digitization or organized data, is something which ultimately leads you to this entire framework of digital lending. Till the time we do not have the data sitting at an organized level, you cannot analyze the data and reach to a conclusion of be it a lending, be it an onboarding, or be it monitoring of the customer. So this entire jump of the I would say stakeholders to set up these banking units is one major push behind this is to create the digital records of the customer, to create digital footprints of the customer so that the customers, one, they can be eased out when they come and avail services from these DBUs. Second is that the bank should have a digital record of the customer, which can be harnessed when the bank is trying to do a profile analysis of the customer maybe 1 year or 2 years down the line. So from that point onward is the point where we started ScoreMe. So currently we are servicing more than 200 institutions when it comes to digital lending, in the country. The crucial challenges which we have, overcome is basically access to information, which has, with the advent of, push from the government side also, and the digitization of various sources. If I talk about GST, yes, GST has been digitized. The point which Mr. Manish raised on the OTP, we figured that point out. So, we had basically built in an algorithm which sends an email to directly the CA of the company. So in that case, you don't need to, take the OTP from the promoter. Directly we send across an email on behalf of the bank to the CA, and he clicks on that link and enters the OTP, and basis which the bank directly receives an output report. So that is something which we have solved on the go. Then coming towards the legal data, since we were monitoring, talking more on the risk side also. If I talk about 6 major sources of legal data in the country, starting from Supreme Courts, High Courts, District Courts, Consumer Courts, tribunals, IBCs, all these basically data points are now getting digitized at a central level, which we call basically a national data judicial grid. Now, this entire data of the legal records of any entity, any company, any proprietorship, partnership firm also are available in a digital manner, and we have been able to, set up an analysis on top of it. So moving on from this, when I move towards the ITR is, again, one of the major documents which is being considered, at a time of digital lending, because a lot depends on how we are declaring our income and expenses to the government as well. Then the introduction of account aggregator, which is, I would say, slowly and gradually setting itself in the country. I would say once this is completely established, then bank statements would also not be a problem, or I would say they will not be a hassle in getting an access to. Meanwhile, we are working on assisted OCR journeys. We are working on digital parsing algorithms for e-banking statements, for scan bank statements. But I think with the launch of account aggregator in the country, we are now able to get this in a digitized format, which can directly be used for a lending product also. Now moving towards, so these are all the tools and solutions which currently banks and NBFCs are being using to digitize the lending appraisal. I would say it is not when Mr. Chandar said that your digitization has to reach at every point of time. It is not just an in-principle approval, but it has to be disbursement versus monitoring as well. So moving on, that now we are sitting at a stage where we validate that, okay, fine, in probably 30 minutes, 40 minutes of time, I should be able to do an in-principle appraisal for any kind of end customer. But what happens after that is, really important. And I think in this part, e-signing has really picked up well in the country, although there are still certain states which are not, yet fully operational on e-signing arrangements. But I would say the states who have already gone live on e-signing arrangements, we are able to take a consent from the customer after the in-principle approval in a quick 2 minutes of time. So once, if I'm looking at, for example, let's say, majority of MSMEs currently fall under the Mudra category, where they either are taking Shishu, Kishore or Tarun loans. So if I have to talk of loans up to 10 lakh rupees, which are collateral free loans or are being guaranteed by CGT MSE, if e-signing is enabled for these type of loans, after your financial appraisal is done, you don't have to do anything. It's just once your e-signing of the document is done, you are good to go with the disbursement. So that is again, I would say for majority of the market, that stage is about to be achieved in the country. And I am very confident that, e-signing will be very soon be available to other sectors in the states as well. Moving on from the high ticket size loans, when we talk about that there's an element of a security or a collateral which is involved there, and we need a validation on these type of documents. So what we are trying to do is the digital lending platform, which we are trying to set up for, a few banks, which is running live in the country also. We have tried to link the entire database of the lawyers and the valuers in the platform itself. So when you are appraised as a customer and your details go to the branch, now the branch has an automated window where they need to select a drop-down name. Immediately an email is triggered to the lawyer or the valuer, and the report is directly, once the report is completed, I'm not commenting on the days which takes for the report to get completed today, but yes, once the report is completed, it directly comes into the system where it is read through an OCR and the data is auto-fed in the system. So now if I have to talk about the, I would say secured versus unsecured loans, both type of aspects, I would say to an extent are able to, be a part of a digital lending chain. There is some work in progress at some key areas of integrations when it comes to, a major challenge is when we talk about different backend systems of different banks and NBFCs in the country. It is not yet easy for a single player to go and integrate with every banking system, because everybody is sitting at a different version of different backend systems. Just to enable a dedupe check for an existing customer takes, I would say 10 to 15 days of development at a, I would say fintech company's end. So, but from that note, things are pretty much moving forward. And I think with ease of access and digitization of information, we should be at a stage where we can say that, we are moving towards a country where majority lending is happening from a touch point basis, or it is happening through a platform basis. Another important aspect which is changing with respect to, we have been discussing this entire webinar on the new to bank customers. But recently what we have observed is that there's a great deal of, digitization when it comes to the existing customers of the bank. See, if we say the State Bank of India acquires 22,000 customers on YONO every day, it means, these customers are getting added to the existing portfolio of the banks, which requires monitoring, which requires renewal. For example, if I am having a CC limit, I need to be renewed every year. So currently, if I talk about the major chunk of MSME customers who are working on a working capital limit, their renewal takes an equivalent amount of time versus the new limit which they can get from a bank. So over here, a major difference which we have created is that now we are trying to create a basically a paperless auto renewal system for CC limits in the country. We are piloting this on 2 banks. They are already live on the system, but what we are trying to do is we are trying to give them more of a cash flow based approach when it comes to the auto renewal of small limits and SMA 0 category customers, because there's nothing much to be, majorly done on that. But if that proactiveness is, adopted by some banks in the country, it has actually eased a lot of, problems on the groundwork. And what is as, major help which they have got is that it has been able to, help them to retain their customers. Because while you are doing timely renewals, it is very important that, every bank is tracking every bank's customer that, when is the limit getting renewed. So if you are slow in renewing the limit, there will be better offers to the customer. So, harnessing the existing customer from a credit perspective is again very, very important in the country today. Moving on to early warning signals, or I would say the monitoring part once the lending is done, there is a huge amount of data since it is already being digitized. I mean, Roy sir touched about CRELIC reporting, regulatory reporting, which is being done. There is a huge amount of AML information, which is available in the form of, negative list, on the public domain. So all that information is harnessed. One thing which has changed, which, fintechs like ScoreMe, we have been able to achieve with the banks is we have been able to take our analysis application through an on-premise installation in the bank. Now, when a system is installed on the bank, basically, where it becomes a bank system and it is hosted on the bank server, So the bank can analyze existing customers' data through that platform, because till the time it is not on their own servers, it is not recommended to share the data of the customers through a fintech over an API or through any platform. So once our solution goes on premise, it continuously keeps on monitoring the entire transactional data in the CBS for the set of customers which the bank might choose upon. And whenever they want to calculate a score, that what are the red flags which are triggered. For example, if in my bank statement, I'm doing a transaction with a company which is, in the strike off category, or if I'm doing a transaction with a company which is a shell company, or a transaction with a company where one of the directors in the disqualified list or is a proclaimed offender. So you can create firewalls in the picture where they can stop you from doing such transactions. So, again, it involves a thorough analysis of the customer profiling, but I would say that monitoring is also really picking up well, and legal data sources which are again getting digitized are helping to create these EWS monitors. So I would say all the 83 parameters which have been recognized by RBI as red alert parameters. Nowadays, the extraction of inputs for these scoring parameters is possible with the data analysis, which is being hosted at the customer's premise. And I think every bank is taking a proactive approach in adopting a new aged EWS solution, where it's more of a mix of in-house information and external information. And I think if I talk about the push from the government side, even in the ease agenda, is more to do with, how you can better profile a customer using internal and external both sources. It is not just an external source, internal source. So now I would say as a country, we are moving towards a stage where I can say that customer onboarding through a digital banking unit. Once a customer is onboarding, the lending through a complete end-to-end lending platform, at least for a low ticket size loan. And thereon, the monitoring of the customer or the renewal of the customer is possible through a technology-based solution, is the stage where we are reaching on. And with more and more, I would say push from the government side and push from all the regulators and stakeholders in the ecosystem, I'm pretty sure that, when we next discuss this topic, we will be sitting at a much higher growth level when it comes to adoption of these services in the country also.
Thank you very much, Shashank.
Brilliant.
I think
Brilliant.
you have talked very nicely.
Brilliant.
One point just I am clarifying from you. For a startup, except the BAI, you can say their account statement, there is nothing.
Correct.
So what type of data you can take to establish his credit worthiness, or you can say credit underwritings?
See, majorly apart from the bank statements which are given at a promoter level, if I talk about a startup, because they don't have, current performance with a current account level. What we try and do is we compare the peers in that industry who have seasoned themselves in the industry. That is point number one, because we have data available for those companies in the public domain. So we try and project that how this startup will be performing maybe 3-5 years down the line. That is something which we by default take it up. And next in line, what we do is a lot of social domain information which is available, not the private social media accounts, but information which is available on different sources is something which helps us to ascertain it. And then the most important factor for a startup is basically the industry in which they're working up. So there's a huge level of industry profiling data which is by default available. So that helps us to assimilate, I would say, at least a year or a two's performance on that part. So that is something which is currently being used to evaluate startups.
Thank you very much. Now I'm coming to Shri Subhash Kalia, former Executive Director, Union Bank of India, who is our guru for this webinar. So I must say, he's well thought, well opinion. That's why I kept him at last, to let him can summarize the position and give us some guidelines to our members. Mr. Kalia has been a career banker with a professional experience of over 4 decades, a gold medalist, postgraduate in political science. Mr. Kalia joined Bank of Baroda in 1973 and worked in several capacities up to the level of general manager in Bank of India till 2008.
Bank of Baroda.
Bank of Baroda, I'm talking Bank of Baroda. When he was appointed executive director of Vijay Bank by Government of India, Mr. Kalia also served as executive director of Union Bank of India till his resignation in 2011. He has other breadth qualification which I am not going to touch. A member of so many committees constituted by RBI, and others. So, Sir Kalia sir, I think you are the best judge to tell us challenges because the past growth is going on. For digital banking, everybody talking about the digital banking. There must be some challenges, whether cyber crime is there. And some people, just we are listening daily, have withdrawn the money from one account, other account, some OTS or something. So many challenges are there, sir. How you feel? Because growth is there and it is order of the day. Definitely, we have to do digital banking. So what is the challenging? What you feel it? What do you see that? How you can protect the cyber crime under the system? Any other thoughts, sir, to summarize the position, sir? I hand over to Mr. Kali.
Thank you, Mr. Gupta, for having me in this panel discussion. And thanks to all my fellow panelists for the brilliant articulation of views on the question that have been posed to them. I always believe that rather than concentrating on challenges, we should always concentrate on opportunities. So that should be the focus of each one of us. Yes, challenges are there. They will continue to be there. And going forward, we will always find solution to those challenges also. Not to say that the digital banking journey doesn't have any challenges going forward. You mentioned about one, there are several others. Cyber security is indeed a very major challenge. Nobody can deny that. When millions and billions of transactions are going to take place in whatever may be the secure level and environment in which those transactions are taking place. But there are hackers. There are, all kind of elements which are available, which can definitely penetrate into the data of privacy and all others. And those kind of cyber crimes get reported every day. I think as one of our panelists was mentioning about the kind of links that are being sent regularly and mistakenly without checking the source. They look so authentic. If you just open and start, doing whatever has been requested, and they will say your account would be absolutely, but would become inactive. You will not be allowed any transaction unless and until you do that. And all those kind of messages keep on coming. So those things, cybersecurity issues are there. There is a need for creating that kind of awareness. I think RBI is taking proactive lead in that. All institutions, banks and all that, they are also taking proactive lead in regularly guiding their customer through messages and all that, that you should never disclose your OTP, you should never open any link and all this. Those kind of initiatives are being taken. Problem is there, but are we taking appropriate steps and initiatives? Yes, we are taking. There are other challenges which we can talk about. We were just mentioning that there has been wonderful penetration so far as internet is concerned, but still there is a large chunk of population which is yet to have the benefit of that kind of infrastructure is not available. But whether the progress is satisfactory as compared to decade back, the answer is emphatic yes. We have really covered a lot of ground. Just imagine the time when I joined the bank. If I will ever share with my children and grandchildren about the kind of banking that we used to do, even jokingly, I will have to describe that it as a museum banking. They cannot imagine that that was the kind of banking that I was doing. The way we were handling the transactions on a day-to-day basis, what kind of queues would be there on the cash counter to get a withdrawal of 200 rupees with a passbook and a withdrawal slip in your hand. From that level to the level which we have achieved in our lifetime is a remarkable journey, I must tell you. I joined the bank, as you pointed out, in 73. What kind of banking used to be there? You have to come, request for a demand draft. That demand draft would be then sent through a registered post. Then your order. Look at what kind of revolution has taken place in the payment infrastructure. Be it RTGS, be it NEFT, be it IMPS, be it UPI, be it BEAM application. I think even the rural landscape has completely undergone a change. Just imagine the kind of digitization that has taken place in this particular payment infrastructure space. Today, before I even click, on my mobile for a transaction that I have initiated, there comes two messages immediately, one of debit to my account and other of credit to the account where the money has been sent.
Yes.
It is unimaginable. 24/7, you are able to use UPI, you are able to use NEFT, you are able to use RTGS. That's the kind of change that we have witnessed. I tell you, it's remarkable. You look at any side of the balance sheet, be it on the liability side, be it on the asset side. Just imagine opening of account has, you can just open your deposit account, same bank account, fixed deposit, recurring deposit. You name any liability product that is available on the go. Today, what you need is only a mobile phone in your hand. That's it. And you can do the entire banking. And we used to get excited when CBS was done. Oh, anywhere, anytime banking. Could we imagine from that stage where we have come now? It's unbelievable, incredible. I am a firm believer in the philosophy that the kind of technological disruption that are taking place, we would be one of the main countries in the world to have achieved that level of digital penetration, which would be a subject of, case study for many institutions abroad. That's my firm belief. Because government is also pursuing the agenda of formalizing the economy. Government is also pursuing the agenda of digital economy, digital India. You start from, I was talking earlier also about Jan Dhan, Aadhaar Mobility, JAM Trinity. Then they came down to India Stack. Now they are talking about India Chain. The kind of technology that are being used by the banks right now, blockchain technology is not being used only by those who have brought in those 6,000 type of cryptocurrencies. They are being used by the banks for supply chain financing. Just look the kind of technologies. API banking has become a normal norm. And this open banking, somebody was mentioning about account aggregation. Imagine the kind of revolution that is going to take place. With the concept, and these account aggregators are being given license as NBFCs, and the kind of information that they are going to get from how many sources, from all financial service information providers, they are going to get the information. And if they have that level of information, of course, with the consent of the user, they will be passing on. The concept of open banking that has been given impetus by our regulators, by our government, I think these kind of initiatives would really take our country much, much ahead. And today, who is not using chatbots? Artificial intelligence is being made use. Today, there is no aspect of banking which is not getting digitized, whether it is service request, whether it is your liability sides, whether it is asset side, whether it is back-end operations, whether it is front-end operations, whether it is mid-office operation, everything is getting digitized. So what I would request and suggest to everyone is that yes, challenges are there, they will continue to remain there, but let's focus on the opportunities. The kind of push that has been given by the government of India in the recent budget, many people talk about 75 digital banking units that are going to be opened in the 75 years of independence. Mr. Manish was mentioning in earlier interaction that we were having about CBS being extended to 148,000 post offices.
Yes.
Just imagine the kind of revolution that is going to take place. And let's not forget introduction of central bank digital currency that is going to take place sooner or later. It will be both for retail as for a wholesale. But everything would have. Do you mean to say that central bank digital currency, when it is introduced, it will not have its impact? It will have its impact on retail side, on wholesale side. It will have its impact on fintech companies. It will have its impact on international transactions. It is definitely going to be having those, and very strong impact on the liability side of the banks. Can you imagine when there is a central bank digital currency and on that the central bank is paying interest? Who is going to keep deposits and from where the banks are going to lend? Today, the entire strength of the banks is the strength of deposit that they are having. I am telling you, banks would be out of the business of lending if they had not the balance sheet strength with them. And fintech companies would have totally grabbed that space. I am making this statement, very strong statement.
Right.
But only because we have that unique advantage of having. But when central bank digital currency comes, this is going to really impact the deposit positions because it is going to be a currency that is going to be housed in central bank. So what I am saying is challenges, impacts would be there. But are we moving in the right direction? My answer is emphatic yes. Have we achieved progress? Fantastic progress has been achieved. See, all these channels which we keep on talking about, online banking, mobile banking, tab banking, you name any kind of banking, these are all channels. Ultimately, everything is happening through internet. But there are some transactions which can be done without the help of internet also, offline also. Some BHIM transactions can be done through that. Geez, this UPI, which is developed by National Payment Corporation of India, is, I am telling you, it is a remarkable revolution in the payment infrastructure of our country, followed by BHIM. So this has actually, today on a Q card, have you seen a vegetable vendor? He has got that QR code. You just go there, payment is made. I mean, these kind of things were unimaginable that is happening. And I think we have actually, and our Niti Aayog, you know how much proactively they keep on thinking. They have started thinking as to how blockchain technology, which is not only important for banking, for the country as a whole, they have come out with the concept of India chain. And they are going to connect so that, you know, there should not be any fraudulent transaction. Because best part of blockchain technology is that it creates block which processes, verifies, and create records. But they cannot be modified under no circumstances. What a brilliant technology it is going to be there. So what I am trying to say in nutshell is that yes, challenges are there, and cyber crimes will continue to take place. What is important is, are we taking appropriate steps to create awareness, to make people financially literate, to make people aware about the dangers, consequences? Are we taking appropriate steps to ensure much deeper penetration of internet, to ensure much better availability of smartphones? I think answer to all that is positively yes. Reliance has come out, Jio has come out with a new phone right now. See, and just look, I was reading recently somewhere that in rural India, 1 out of 3 ladies have access to internet. Can you imagine? I mean, it is something I have worked in as a chairman of a regional rural bank in my professional career. I could have never imagined that. Today, that's a reality. So this is, I mean, some of the we thought we have overshot our time.
Sir, thank
so
you
much,
very much,
but
sir.
I must say that all the panel members, they have really come out with some brilliant ideas. There are some brilliant thoughts to carry forward from these panel discussions. and to just reflect on whatever has been summarized. Manish was, of course, talking about the challenges of digital banking. They are all very well placed and very well articulated. But Manish would also vouch that so far as the sphere of unsecured lending is concerned, at least in that area, digital lending has absolutely no issues. Yes, in the secure lending where there are to be collaterals and all that, there are issues. But Shashank, I think, has very brilliantly told what kind of, technological innovations that are being thought out to overcome those challenges. Challenges will be there. Why I'm making challenges are there, but in unsecured space, is there any challenge, Manish? I would ask Manish, in the unsecured lending space, in the digital banking, is there any challenge? I
No.
don't see any challenge. Yes, in the secured, but Shashank, I think I must give credit to him with the kind of, ideas that he thrown out to tackle those challenges. These are the kind of, positive feedback we should get and try to move forward. Thank you so much, Mr. Gupta.
Thank you,
I think
sir.
that's all
Thank
that
you,
I would
Faria
like.
Saab. I think you have summarized the position very well, and you're talking about the opportunity instead of talking about the challenges. I think it is also envisages for within 3 or 5 years, 1 billion transaction per day.
Yes.
That is a future. That is the future of the banking. Sir, I am coming to Mr. Rai sir. Rai sir, have any ideas, sir, for the future? Future of the digital, that is your baby, what you're told. How you feel the future of this digital banking? Last
Sir,
word to our the listeners, sir.
I would like to draw to a small development in last 3 years. That from there only you can derive how the future is,
Sir.
and how we are planning to develop our business on digital platform. First of all, I should say that I has narrated that 103 new banking has come up in last 3 years.
Correct.
Almost 50 million customers have now onboarded for digital lending. All the NBFCs, banks, they all have come together to lend to the last mile of the people, because still there are people who they have not been given the formal reach to the banking. So there, through digital banking, we can reach. And now coming to the lending portion, I will be giving a simple example that we are depending on the traditional MPBF system, working of 1.33 current ratio, TOL, TNW, which is solely based on the CMA, and it is all made as per the vision well. Here in digital lending, it will be a very realistic approach because it will capture the cash flow. So based on the cash flow capturing and lending, it will give us the opportunity to lend to the people who they cannot enter into the formal banking system by adopting this ratio mechanism. Like a service center of a car. He might be having all cash flow, but he might not be maintaining any balance sheet. He might not be maintaining any kind of formal rule books. But of late, he might have started giving GST. And through GST, we can capture his cash flow and we can lend him without putting him into the old mechanism. What I'm trying to highlight, the avenues which are unexplored, the people who they have not get connected because of these hassles, all those hassles will be removed, and we will be reaching to each and every people of the country. Thanks to Corona, in last 2 years, they have made us to learn the value of the digitization. So we will be, this is the future I can in simple word illustrate with.
Very nice, right.
Thanks to demonetization and pandemic.
Yes.
Demonetization, we should never forget.
Yes.
Right, sir, there is one question. Is the digitally signed document accepted legally as per the physical signed documents? I think it is accepted, no, sir?
It is accepted.
Yeah. And as Shashank was narrating you everything, the legal document, the financial document, everything, the resources are now available. And more or less those states which have onboarded for their available data, land record and everything, it is fully now digitized. Madhya Pradesh, West Bengal, everywhere the digital data is available for land seeking. So that all those digitization had made our work
It is
much easier.
acceptable. It is acceptable, sir.
Yes.
Another point, Shishant, there is one point. There is a lot of discrepancy and mismatch in the proof available in respect of full name, address, etc. How this could be fixed on lending? I think this is your
So we use multiple documents for this. So, there can be a mismatch on your Aadhaar card, but the same won't be on your voter ID card or a passport or a driving license or a PAN card. So we use multiple sources and we calculate what is the confidence score of the name which is there. For example, my name is Shashank, but it is written as Shashank in one document.
Right.
So T and K will not match, but then I will look for other documents. If T is, in majority, then I will consider it as Shashank. If K is in majority, I will say it is Shashank. So basis on this, there's a confidence level which gets generated for the name match in different documents.
Another question, whether we can reply something. How personal wrap out relationship and touch will be with the customers? Because this personal touch has already gone. Now, very few person are visiting the branches to have a personal contact, anything. So how do you address this issue? Sir, Rai sir, any opinion on this point? Sir, no voice. Yes,
Sir, I fully agree. In banking system, a personal connect is also very important.
sir.
And as you told, the digital scenario will come into play for personal connect. This social media, this chatbot, this robotic assistant, all these will come and they will be giving the personal touch to people, because every question of yours will be answered in a humanly manner.
Sir. Very nice, sir. Sir, have any last word, Rai sir, to our listener, to our members? Any advice from your side, sir? Rai sir?
Yeah, my advice to all my listener and my potent customer is that you should maintain all your digital record properly and be very prompt in maintaining your track record for the relationship for any banking and transaction properly. That will be the strength of yours for future banking.
Very nice. Sir, from Kalia sir, have you any advice, sir?
I have been somebody was talking about, see, the future of banking is high tech and high touch. Personal touch can never be lost of. And even today, when we are in the stage of evolution of digital banking, though there is self-service model, which all of us are getting used to, but there is an assisted self-service model also available, where that, personal touch is available to the people. And even otherwise, whatever may be the scenario, some kind of that touch with the customer is very, very important. That's what I personally believe, because the way we have understood the whole thing is technology is very, very important and crucial, but you cannot lose the touch with the customers. That's equally important.
Very nice. Any Manish Arora, anything from your side? Lastly,
the customer has to be at the center. We are all here existing only because of him.
Right.
So cannot afford to have touch which is not human. At least it should have a humane touch, but maybe digitally, as mentioned by Mr. Roy, through chatbot and all that, or assisted model, as Mr. Kalia has pointed out. We need to have options. At the end of the day, we are human being, and we love to connect. Whenever we believe that we need some assistance, we need some solutioning, we need some guidance, like a mentor, like a partner, like a friend. I should have a option available, and I believe those options won't go away, as rightly pointed out.
Thank you. Anything from Mr. Sani? Sani sir?
Just one point that, in digital lending, we are seeing this revenue-based financing picking up because, all these data points that we discussed, startups are not having any assets, no tangibles, not collaterals. So this payment gateway is one point wherein you can, using APIs, you can track that what is the kind of business which is getting generated. So you can avoid the problems which are in traditional GST and other things, because payment gateway can be connected with APIs. And so because of which there are companies like Velocity and other companies which are able to, look into this revenue-based financing mechanism.
Correct.
Thank you, Mr. Sani. And Mr. Sharma ji, anything from your side?
Well, I think rightly summarized with everybody here. So I think your physical touch is now getting replaced by a digital touch, but I would say it comes with an advantage that now the turnaround time is pretty less. So that is one beauty of the banking system. But I think this will evolve further, and we'll certainly see more innovations here.
Very nicely. At the end, sir, I am thankful to our great panelists. I think today we will discuss in the right perspective of all digital banking. And I'm thankful to respected Sukhsagar Prasad ji, Rai sir, who are the architect of this webinar, who suggested me that we must do it. And we have listened to his thoughts, his great thoughts. And future we are also talking about. Thankful to sir. I'm thankful to say Suhas Kalia sir, who is the mentor of this webinar and who advised us very clearly what is the future, and we should not talk about the challenges. We should see what is the opportunity. I think this is a Guru Mantra he has given us. And I'm thankful to Mr. Sani, a young dynamic person, given his viewpoint very clearly. I'm thankful to Mr. Sani for sparing your times. I'm thankful to Mr. Roy sir, who is also well experienced under the lending platform. So I'm thankful to you for your sparing your valuable time and bless these webinars. I'm thankful to Shashank Sharma ji, who is, I think, given a very insight of the monitoring, processing, everything he had told. So I'm thankful to you. In the end, I am thankful to all the participants and even my back team, Rohan and his team, for making an excellent arrangement. Other thing, I'm thankful to everybody. With this word, I close the session, and I will, Resurgent will also be expressed.
Sir, before you should end, I will extend my heartiest regard to Kalia Sahab.
Thank you, Mr. Rai. Thank you so much.
Thank you.
Grateful
And
to
all
you.
my panelists, Mr. Manish Arora, Shashank, and Chandar. It is nice to listen, and it is a very, the kind of opening, because we are the core banker, and they are into the core of the
Correct.
development of the
Banking.
background system. So, in fact, they are our extended arm. So, thank you very much for sharing your knowledge,
Thank
because
you.
that will contribute in a long way in the country. Gupta sir, if you can share the number of all the panelists, it will be useful for us to interact quite often.
I already formed a group where you can have all their numbers. In webinar, this group is already formed where you are also member. Still, we will again share in that group also.
Right.
I am also sharing all the recording of this webinar in that group also. That will be, you will find out. And whatever
Thank you very much for giving this
Thank you.
opportunity.
whatever
Thank you.
feedback I am getting it, and I am also sharing with you, with all the panelists. And lastly, I am thankful to that I request all the members or the listener or the stakeholder, banker, and my friend, they should become the member of the associations of the financial advisors. That is my request to you. I am sending the link for that. They should be member. For Resurgent India platform, that you know that Resurgent is a merchant banker. We are doing a debt syndication. We are doing a technical viability study, insolvency, valuations, and everything. Even ScoreMe is our extended arm for which our fintech company is doing it. Any DPR, other thing requirement is there, so we are here to help you in that respect. With this word, I close the session.
Thank you. Thank you,
Thanks,
Mr. Gupta.
everyone.
Thank you so much, everyone.
Thank you, sir. Thank you.
Thank you.
Thanks to Resurgent team. Thank you. Bye.
Thank you.
Thank you.
Thanks to all the panel.
Thank you, sir.
Take care.